Hi, I'm Nick. Welcome to Ascent Accountant's Vehicle Logbook Why and How. Okay, so many people are missing out on big tax deductions because they don't want to record a logbook. They think it's going to be painful, hard work, and they think they've got to record one for the whole year. The fact of the matter is, it's actually pretty easy, and if you don't do it, you could be missing out on a lot of deductions. I'm going to quickly show you the reasoning behind this, and then I'm going to show you how to keep one. So let's get stuck in. First of all, I'll quickly explain to you why a logbook is good. Okay. Now the ATO has only got two ways of deducting car expenses now on your tax return. That's method one, cents per kilometre, which is a lot easier, but limited in terms of how many deductions you can actually deduct. So I'll quickly explain this first. Cents per kilometre method starts at 66 cents per kilometre, and there used to be different amounts of different size vehicles, but the ATO's I think trying to discourage this method now, so there's only one amount, which is 66 cents, and it's only for a maximum of 5,000 kilometres. Now you still need to make a reasonable estimate on your kilometres, and the ATO can ask you how you came up with a figure. So it's not as simple as just saying, okay, I'm going to deduct the full amount of 5,000 kilometres. You actually have to have some sort of method to your madness. Now, if you do claim the maximum, you're only allowed to claim 3,300, which is 5,000, of course, times 66 cents. What if you spent more than 3,300 on business related vehicle expenses? Then you're actually selling yourself short, and you're going to pay more tax than you need to. So the other method, the better method, is method two, which is keeping a logbook for 12 weeks. And then you calculate the percentage of business and you multiply it by the actual expenses you incurred. Okay, so let's have a quick look at an example. Okay, say for example you bought a car for $40,000. Okay, now the big one a lot of people forget when they're new to business or it's the first time they've done a tax return deducting car expenses is the depreciation on the vehicle. That's a deduction, which is basically allowing for the fact that your car loses value over time and eventually will break down and be a piece of junk one day. So what we've got is we've got a $40,000 car here. The ATO lets us depreciate a vehicle over 8 years. So that's $5,000 every year you could potentially deduct from your tax return. Obviously that would be 100% deduction, but we'll get into that a bit later. The other great thing is the ATO lets us accelerate the depreciation. So we work out what the depreciation is over 8 years, $5,000, and we can claim twice that amount until the 40,000's been written off. Okay, so we'd claim 10,000 the first year, then maybe 9,000 until it's all gone. Then you've got fuel, you've got repairs and maintenance, and registration. If we add those all up, that's $19,000. Okay. Now, say for example you think you use your car about 50% for work and 50% personal. Well, straight away you know that you're going to get half of $19,000 as a deduction. But if you don't keep a logbook, you're going to miss out on that. So what's half of 19,000? $9,500. If you use the other method, which is a maximum of 3,300, obviously you're going to miss out on $6,200 worth of deductions, and you might use your car more than 50%. So that's the reason for using the logbook. Okay, now let's just quickly go through an example of how to keep a logbook. First of all, you're going to have to keep all your receipts. If you don't keep your receipts and you don't know what your fuel costs were, your repairs and maintenance, your registration and insurance, then you have to use method one, 3,300 maximum claim. But it's not hard to keep hold of your receipts, and if you've got good records, you know, that's pretty easy. Okay, so here's a logbook here, over here. This is my logbook. Now you can get paper versions, but they're basically the same thing. I'm just demonstrating because I'm on the computer here on an Excel spreadsheet. So what we need to do is we need to keep the logbook for 12 weeks, which isn't hard. And you can keep a logbook for 12 weeks, and then you're allowed to use the percentage that falls out of that 12 weeks for the next 5 years or until you change cars. So it's 12 weeks of pain, which isn't too painful, and then you can use that percentage for the next 5 years and get much bigger deductions. Okay, so all we have to do is day 1, 3rd of July 2016. We checked our odometer, we saw it was 13,000 kilometers, and we made a note of that. And we went and we did some Uber driving, okay? And that day, it was a slow day, we only did 100 kilometers, okay? 100, bang, there you go. So you just got 13,100 minus 13,000, you've got 100 kilometers here, okay? Now, the next day you went shopping. On the 4th of July, you went shopping, and on the day after that, you took your family to the beach. Well, we don't care. Sorry, I'm glad you had a nice time, but we don't care for the purpose of this calculation, which makes it easier. We're only recording business, okay? Then a few days later, you decided you were going to go and spend the evening doing some Uber driving again, and you checked the odometer before you left the house, 13,200. And when you got home, you check the odometer again, 13,250. Okay? So there we've got 50 kilometers that night. And we just keep on going. So the 7th, he did some more Uber driving. 8th, did some more Uber driving. Had a few days off. 15th, did some more Uber driving, etc., etc. And then 12 weeks later, we record our final work trip, business trip, which was the 23rd of the 9th. And he did 426 kilometers. Okay, so that's your 12 weeks here. Now, obviously, if you were a busy Uber driver, there'd be more lines. You can insert lines yourself. You can buy a logbook from the newsagent and keep a hard copy, or I'll upload this. I'll send you a link to this one if you want to use a spreadsheet. But it's just as easy to buy a logbook from your newsagent. Now, so we've done the hard work. That's your 12 weeks done and dusted. Wasn't too painful. We look at the total kilometers. Okay, we just add them up here. And we've got 3,675 work kilometers. Okay? But the total kilometers from the start here on the 3rd to the 23rd of the 9th, September. Okay? We've got the start and the end kilometers. So that's our total kilometers, right? So all I've done here is I've just taken the end kilometers and deducted the beginning kilometers to get total kilometers. So now we've got everything we need. We've got total kilometers, and we didn't even have to record our personal stuff, it's just obvious. And we've got business kilometers, which is just the total of all the business trips. Now if we divide the smaller one, the business kilometers, by the total kilometers, we get 82%. Okay? Now in my example, we had 19,000 of business kilometers, of business expenses, I beg your pardon, 19,000, and we know that we use our vehicle 82% of the time for work. So 82% times 19,000 is $15,603 that you can claim on your tax return. Now, if you don't keep a logbook, all you're going to be able to claim is the 3,300 over here. So it's obviously worth it. You're going to get a percentage of this 15,603 back, depending on your marginal tax rate. If you were in a 30% tax rate, you'd get about $5,200 back in your hand, or reducing your tax bill. Okay? So it's definitely worth doing it this way. It makes me a little bit sad when I ask my clients each year if they've kept a logbook and they haven't, and I know they're missing out some big deductions. So bear that in mind. Buy yourself a logbook and record those work kilometers. Okay. If you need any help, give us a call at Ascent Accounting. We're in Cannington, Western Australia. Just Google us or look in the links below for our website and phone number. Thanks very much. Bye.